Good morning, good afternoon, good evening, whatever time it is, time of day it is, sorry, wherever you are. Welcome to of the Friday Fix with the awesome guys from AlphaPicks. Actually, I better check. Can you hear me okay? Because I'm using my headphones.
Yes, we can.
Yeah, we can.
Turns out I'm not using my headphones. So you can hear me right now, yeah?
Yeah.
Okay, perfect. Okay, so for some reason I put my headphones in and they're not working. So carry on. Anyway, this is great start. This is the Friday Fix with the awesome guys from AlphaPicks. Those of you that don't already follow them, what the fuck are you doing with your lives? They put out phenomenal content both on X and via their Substacks. I don't know who's got a lot of background noise. It sounds like someone's at a nice little cafe or something like that. But yeah, so get involved. What we tend to do on these is go over major trends of the week, take them apart very candidly, and yeah, just have a little bit of a natter about markets. Guys, how are you?
Very good, thank you. Yeah, very well. I actually feel like it's my audio that's the problem this week. I'm actually on a mountain, actually, sat looking out ski east. So yeah,
The piece. You're on the piece then.
I'm on the piste in more ways than one. But
Which makes a change. It's just me on the piece during this.
I mean, Jesse's still in the little chef.
Business is
Wait,
great.
is it still bad?
No.
Oh.
No, just to update everyone. So basically, a couple of weeks ago, it sounded like Jesse was doing his side of the recording from a toilet in a little chef, and we think he might be just got a sideline jobber looking after truckers, shall we say?
Exactly.
Also, I think this is the most European setup for a Friday Fix, that everything's going on in the Middle East, and being a European, Alex is on a ski trip.
Yeah.
And I'm at Stafford, and you're probably at David Lloyd. But anyway, right, let's crack on.
Yeah. I mean, really, there's only one major topic which will
what is
take
that?
the entirety. Yeah, I know. No prizes for guessing what that is. And yeah, it is obviously the conflict in the Middle East, which has been ongoing. And I mean, funny enough, and actually where I wanted to start was with you, Ryan, because, last week we spoke about how your favorite Strait of Hormuz, the probability of it being closed was really only if things were getting very, very serious. And actually what we have here is Brent beyond $88 a barrel because the Strait of Hormuz is basically stopped.
Yeah, well, exactly. And I think if anyone remembers, I put in every caveat known to man. Look, up until this point, they've never tried shutting it, but this time it's different because if we get regime change and the regime is up against the wall, then what other options have they got? And lo and behold, in the first night, they basically, people are saying, this is what gets me. People are saying, oh, it's not a regime change. They've taken out 40 of the top regime leader or however number. No matter who comes in next, it is a regime change. It's like, it's like selling all your players at a football club and saying, no, it's the same team. It's not.
Yeah.
But I think
Good analogy.
Yeah, there you go. But I'm saying this as Arsenal fan, by the way, so hopefully fingers crossed. But one thing I think is worth noting, and again, I link back to the article I wrote in January, which was, Iran headlines does not equal $100. Now, they've actually closed the Strait of Hormuz, although there was a LNG tanker slipped through this morning or last night, whenever it was. Lo and behold, it was an Iranian dark fleet tanker, so they ain't going to shoot that one. But, we're seeing for however you want to deem it, it is a closure of the Strait of Hormuz. But oil still isn't $100. And this kind of proves my point. And as I said before, and I've said countless times, you need prolonged closure. You need oil facilities getting hit and, like active facilities being hit. Also, there was a bit of a scare the other day about a tanker that got hit around by Iran. If you looked into it, it was actually an Iranian tanker, fuel tanker that was basically linked to smuggling. But obviously, no one on Twitter cares about that. So that's why oil didn't go batshit crazy on that number. But I think it's just very interesting to note that, we're still not at $100. The strait is closed. It needs closure for a long period of time. There are other avenues to get oil out, such as the Sumed pipeline. Egypt have already offered to help the Saudis get their oil out via that way. There's a lot going on. I think one interesting thing this morning came out. So we heard a couple of days ago, Qatar nationalized oil and gas in industry basically said they're kind of force majeure on all of their gas exports, and now it looks like they're moving into the oil markets as well. And then we've had this morning the Qatari energy minister came out and basically, and a lot of reporters that have never covered oil before in their life have got very frothy over this, saying that unless something's done, or this is going to lead to huge global slowdowns, basically the world economy is going to come to a crashing halt because they can't export their energy. Well, yeah, the Qataris are going to say that because they need to try and kind of get Trump to secure transit through the Strait as soon as possible. Because one, they need to start pumping. The Qataris need that money, right? They need that. They're losing billions of dollars. Also, for the rest of the region, if we can't get ships into that area, it means the storage is going to fill up. I think JP Morgan said it was a 22-day. This is 2 days ago, 22 days worth of storage that they can keep storing for. Otherwise, then they've got to shut down production in fields because you can bring it out of the ground, it has to go somewhere. And that's the issue. If you shut down the fields, it then, when you start shipping it back out, it then takes a while to get this production back up. So look, there's a lot of moving parts, and I appreciate I've probably covered far too much there. But again, I think the interesting thing as well is the markets are still very organized. Yes, they're volatile, but they're not falling apart, if that makes any sense.
Yeah, for sure. I mean, I've sort of tried to stay away from the actual sort of energy markets in terms of trying to offer a view on something that I'm not an expert on. I think you've done a very good summary of it. But certainly one angle that I wanted to chat about, which is more in my lane, is in the FX and rate space.
Yeah.
And the massive shift in pricing we've seen on OAS and short-term rate expectations for the ECB, the Bank of England, the Fed, etc., on this worry that the energy spike is going to translate into a massive kick higher in inflation, and the central banks are going to have to take action this year. And I think the most prominent one we've seen is with the ECB, where as of this morning, a 25 basis point hike is priced in for as things late summer. And in my view, this is, in terms of like mispriced opportunities, I see this as an opportunity, not actually on the ECB, but with our friends back in the Bank of England, in terms of, now less than one cut from the Bank of England is priced in for this year. And I feel that is definitely a mispricing.
Yeah.
One is because when you actually look at the countries that are most sensitive to a spike in oil, and Europe is definitely up there as number one. The UK less so nowadays, but still sensitive. But ultimately, we ship it back to the fact of, and I was talking to Jesse about this earlier in the week. One is that I don't think it's in anyone's interest, least of all the biggest player, which is Trump, to have a prolonged war in the Middle East.
Yeah.
He wants to get this thing done and dusted ASAP Rooney. And if we do see this end in the next 2-3 weeks, the actual pass through to inflation is going to be relatively limited.
Well, if anything, right?
If anything, yeah. And you add that. So one is it's in Trump's best interest to get this done quickly. The other thing for the Bank of England is that, yes, you've got a spike in energy prices, which maybe feeds through a bit to inflation. But, the UK economy, as we've discussed at length before, is struggling. And there's loads of signs across the labour market, loads of different indications. So I still don't feel that the Bank of England can get away with just cutting once this year, even if inflation ticks high to, 2.4% headline, that type of vibe. So although it's very wise to wait for the dust to settle, from my perspective, I'm staying away from something like oil futures. But I think nicer indirect expressions exist, for example, in the rate space.
Yeah, I think that's an interesting. I think the BOE is a good one to highlight because, in my opinion, they've got to cut anyway because, the way the economy's shaping up, etc. But yeah, what's your thoughts, Jesse?
Well, yeah, so you were making that point, like the Strait is closed, but oil's not quite at 100. It's almost like markets don't quite believe that any impact is going to be like extended or prolonged. But the rates market is kind of has priced in a prolonged impact on inflation because, with like the ECB, I think they're now pricing in 100% of a 25 basis point cut this year. But then the three banks do have the different dynamics going on. Over in the US, being a net exporter of oil, they obviously have less economic pressure with oil higher. And then the UK has the labour market dynamic. So I agree with Alex. It's a trade that we've kind of been talking about all year. I think at the start of the year, it was about one cut price, then we moved to two, and now back to one.
Yeah.
I think that's probably a dip that you could buy for the Bank of England. I'd be on side with that. I think the Fed's maybe an interesting one. I'm still a little bit unsure if the move is one to fade. But yeah, with as far as Sony markets, yeah, I agree with Alex there that I think this is a move I'd be happy to fade, and probably my highest conviction out of all the moves in the market, and staying away from trading oil outright.
Honestly,
Yeah.
I think it's very easy for people, especially that have never really traded these environments before, and when we've had prolonged issues in the Gulf, that doesn't happen very often. Certainly, we haven't had anything this serious in quite some time. But it's very easy to think, oh, do you know what? As a, maybe I say a retail trader, but I think that's a really disrespectful term a lot of times. I'm not really a big fan of retail trade. But say you're not someone at a bank or whatever, you're trading for yourself, whatever, however you want to phrase that. It's very easy to see these big headlines and then you see a big move afterwards and think, oh shit, I should be trading this. If you do that, you will do your ass, because there's a lot of smart people getting a lot of these headlines a lot quicker than you are. And you kind of, when you're looking at the markets, you only kind of picture the ones you would have made money on, not the ones you'd have got topped and tailed on. So I think it's very important as a trader, you understand, your limitations. But yeah,
For sure.
just a word of warning basically there, because it's very easy to get sucked into trading on stuff like this. And I promise you, if you haven't got experience, you will do your ass.
Very valid. Thanks for the disclaimer.
I think we always say this is like the podcast isn't trading or investment advice. Basically, the only advice you give is don't trade. That's
yeah, it's true. Or incredibly balanced on both sides.
Yeah, exactly.
Yeah. And then just actually touching on some other markets to this that I thought was quite interesting. I wanted to do equities and I wanted to do precious metals. Maybe if we start with precious metals. So gold in particular has been a lot of two-way price action this week. I think technically slightly down versus this time last week. But it's like, we haven't seen gold materially strengthen as potentially some may have thought we would. The same silver has been incredibly volatile in the same respect. But I think that is quite telling in the fact of, I think sometimes over the past couple of years, part of the rally in gold and silver we have attributed to safe haven properties, which I think has been fair to a certain extent. But I think potentially, given the size of the move we've seen over the past couple of years, it's, the risk reward of buying gold as a safe haven above 5,000 doesn't quite stack up in the same way it did a year ago. Yeah. So in some ways, I'm not actually surprised to see gold not materially rising over the past week, because I think it, from a risk reward perspective, it's not quite there right now.
I agree with you. And also, I think it's interesting to note and interesting to point out that we did have some I call them correlation one events, where basically everything goes the same way. And we had that when markets were really falling out of bed this week, a couple of points, where gold was getting sold, bonds were getting sold. And equities are getting sold. And you got people looking like, well, gold should be going up if equities coming off. It's like, no, this was like everything, the correlation of everything was going to one, because it's one of those where people were getting stopped out, people getting margin calls, people getting very wary and get a bit of panic in the market. And then you literally just want to sell you want to sell whatever you've got just to get it off the table. And some people, we see it, when we really have proper crisis. We see it, people are like, well, why is gold getting sold off? It's because that's a liquid asset that they've made a lot of money on. They're selling that to fund other positions. And I think that's another market dynamic that we haven't seen in quite a long time. So it's quite interesting to see that one raise its head again.
Yeah, I think that's a really good point, Ryan, because the right way to view it is people not selling or buying what they want. It's selling and buying what they can.
Exactly.
So if they've had big, obviously gold's been such a consensus trade for years now, and everyone's got big positions, but then that's an easy position that they can sell to cover.
And it's liquid, you know what I mean? It's
liquid.
And that means a lot when you're trying to fund other stuff, selling a liquid asset that if you need to, you can also get back into very quickly. It's ripe for that kind of trade. And I think it's very easy for some people to read too much into that, when literally it's just people needing a rush for cash.
Yeah, for sure. And then moving to equities, again, you could argue actually large cap equities, talking about the S&P, have in some ways been the least interesting, should we say, asset class over the course of the week in terms of volatility. Well, volatility is one thing, but in terms of outright directional moves, we haven't sort of seen that in large cap equities. Obviously, I think part of it is still we are in earnings season. So you've got other factors coming in at a company specific level. But yeah, I think actually, if you've essentially just held large cap equities over the past 2 weeks, your portfolio arguably is probably, hasn't bled anywhere as much as if you were positioned in other asset classes.
Exactly that. So full disclosure, like the only open positions I've got at the moment are, well, S&P obviously, and I'm just quite happy just to keep adding on dips, which is what I do. And Microsoft is probably my biggest holding, and that's been, it's actually done all right in the last few days this week. Oh, and also I've got some Greg's, even though I've never stepped foot in the Greg's and I never will. But there you go. And Greg's is doing okay since this kicked off. So I don't know what that means.
They import their state picks from from the Strait of Hormuz.
Well, this is it. Yeah, I think maybe
supply chain issues.
Yeah, well, no, not at all, because they're going up. But yeah, it's all good on the Greg's front. But you still couldn't pay me to go in where.
But, oh, really? You're not a Greg's guy? Okay.
No, I've never stepped foot in Greg's. I don't think I ever will.
Okay, fine. And so I suppose after recapping everything from here, in terms of summing up, where would you? So based on where we'll be this time next week for the Friday Fix, are you happy to make any sort of forecasts or predictions on how the situation lands?
Not at all.
Not even a deterioration, moderation, or stay the same?
Not at all, because we've got so many conflicting rumours and whatnot. That like the kurds are coming in from the northwest, is it? The ground ops, the air ops is still going on. I think we could be quite near hearing some confirmed reports of, regional kind of commanders of the IRGC kind of saying, do you know what, hands up, okay, we can kind of work with you guys, work with the allies now. Well, if the allies are if you're on the right side of the allies. Yeah, but then again, it could all fall apart. It's so volatile. And this is why this kind of brings me on nicely to something that I wanted to mention, is the fact that we all, for the last God knows how many weeks, we've seen de-risking into the Friday close on the chance that something does happen. Now something is happening. I think that's only going to be even bigger. If you have got any substantial risk on, are you going to keep it over the weekend? I would be surprised if traders did want to do that. But then do we get like front running of the de-risking in Friday? I think the de-risking angle is definitely something to watch today.
Yeah, no, I agree with you on that. I mean, the only takeaway I would offer in terms of looking forward to next week is one I mentioned at the beginning briefly, is that it's not in Trump's interest for this to be a drawn out conflict when, already, he's got one eye on the midterms already.
Yeah.
He's got one eye on energy prices. He's got one eye on, lots of different things, but he doesn't want this to play out as a negative story for him leading into midterms. And so from that perspective, even though he said, we don't want to go on the ground and all, it does get very complicated, but I wouldn't be surprised if there was a concerted step up from the US to try and, as you said, take out more of the regime and just get it over and done with, or at least have such a show of power that it brings them back to the negotiating table.
Yeah,
that's what I would say.
Yeah, I think this is one of the things that everyone's saying, oh, this is going to go on for weeks and weeks and weeks. We could get a Trump social post, in the next hour saying, oh, so and so is now at the table, and then it's all bets are off again. It's like, it's such a fast market for this. Anyone listens into this in 3 hours' time, we could have a lot more information by then.
Yeah.
And again, but this brings us back. This is why it's so difficult to trade. And it's also so difficult. This is why it's also so difficult to hold trades over the weekend. And again, this is one of those occasions where if you are a portfolio manager or anything, you are, zooming out and just saying, well, look, we don't want to be, top and tailed all over the show. Where's the best place to park our capital where it can kind of weather these storms? And, like you linking back to what you just said, one of the easiest things to do is put it into the, mega caps.
Agreed. And Jay, give us your takeaway thoughts over the next week.
I think you guys made a lot of good points. The only trade I would
Don't sound surprised.
Never surprised. I think maybe if I was going to make one call into next week, would maybe be like continued dollar strength, just because it has really been the only haven this week. And with how short positioning was going into this year,
good point,
and leading up into this event, you've got multiple fronts that is a driver of that dollar move higher. So potentially more safe haven flow into the dollar. But then as for gold, silver, oil, equities, I think is too volatile and headline to headline to make any prediction or call on that front.
Yeah, no, that's fair.
Yeah.
Yeah, I think
Yeah.
I'm with you on that one.
Yeah, no, it's fair. Fine. Well, I think that's kind of summarised the major situation.
You can go back to your beer on the mountain,
You can go back to your cigar and
and Jeff
gin and
can go
tonic.
back to his truckers.
You can go back to his gammon and eggs.
Brilliant, guys! Thank you so much as always. An absolute pleasure. Listeners, thank you as always. As I repeat what I said at the start, do follow the guys. Do subscribe to the Substacks, etc. Love you lots. Have a great week.